Now, a gathering in Switzerland may also find itself overshadowed, if not dominated, by the attitude of China. This is when the World Economic Forum gets underway in Davos later on this week. So here to look ahead to that meeting with us is Hans Goetti. He's Chief Investment Officer at LGT Bank in Singapore. Good morning to you, Hans. So yet another gathering of global leaders, politicians and business people. What is going to be most talked about at the summit?
I would think it's the still fragile state of the global recovery. We do have a recovery, but in most developed countries, it's still based on fiscal and monetary stimulus, and we will have to see a follow-through with private sector demand, and I think that's probably one of the topics that will come up, how to rekindle this private sector demand. Bank lending is still largely absent or very subdued, if you will, in the United States and Europe, as opposed to emerging markets like China, where you had 35% loan growth and you had a tremendous recovery there. So this will be the major topic, probably to see how the global economy can be put back on its feet and this recovery can be made sustainable.
Right, no doubt there'll also be some heated discussions about Obama's plans for the banks. Now, this is one of the things weighing on markets. We've got a 6th day of losses in Asia, global markets last week sliding on this, and also on concern about China moving to rein in growth. Are investors correct to be so concerned about these two things, or are they overreacting?
Well, as far as the Obama plan is concerned, it is clearly a response to the Senate seat loss in Massachusetts. It's part of it that it was announced now and not later. It's also significant to see that all of a sudden Paul Volcker is coming back to center stage after having been ignored for about a year. So there seems to be a little bit of a shift in the White House to whom the president is listening. But I think the point of that whole banking plan is this. The banks so far have been able to borrow very cheap funds from the Fed and have been able to make huge trading profits. And if there's any sign that the access to cheap money from the Fed is restricted or curtailed, that could have a pretty negative effect on liquidity in the stock market. And we have been saying now for the last few quarters that equities are going higher. We have been bullish on equities, but mainly based on liquidity conditions, not so much on the economic underlying fundamentals. And if liquidity starts to be curtailed, that could be negative.
Right, you alluded there to your investment strategy. Give us the highlights quickly of your strategy going forward over the next few months.
Over the next few months, we, on the currency side, which is very important, we are long dollars. We want to be overweight US dollars for the next 1 or 2 months because the risk trade seems to be a little bit on the retreat. We will probably trim back some of our equity positions, although we don't think that we have to issue a sell signal just yet because the Fed's stimulative policy remains in place. The ECB is not going to exit. The Bank of Japan is not going to exit. And therefore, we think that equities are probably still holding up quite well.
Okay.
And we probably see a bounce after this drop that we had.
Hans Goetti there for us from LGT Bank. Thanks so much for joining us this morning. Now